The market felt so heavy today. It was like carrying a leather bag with just one strap around your shoulder. A bag full of 10 bowling balls. Not kid-size ball, regular adult-size bowling ball. That's how heavy the market felt today. But it's not all lost, because today and this week actually is earnings week. All right, so we're going to talk about how earnings are going to affect the market, what the next steps are for the market. We're going to talk about how Wednesday is also Federal Funds Day. So we're going to talk about how all of these things will most likely take a huge effect in the market. And without further ado, let's get started with the video. All right, so number one, AMD, Snapchat have earnings tomorrow after hours. Exxon, UPS have earnings tomorrow pre-market. And then McDonald's. How did we forget? How did we not even mention McDonald's? Hopefully McDonald's has some pretty good earnings. We can, if they have good earnings, maybe we'll get like a discount on our purchases, so that when we give it to the MMs, McDonald's discount. So there's that, right? But then the most important earnings are going to be Wednesday after hours. We have Facebook. And then Thursday after hours, we have freaking Amazon, Apple, and Google, all in one day, back to back. And this is definitely going to really, really cause a lot of movement in the market. So what is the most interesting to me? So number one, we could just go over with the news, right? So tomorrow morning at 9:45 and at 10 a.m., we're going to get news released. So we cannot be in any positions during 9:45 a.m. and at 10 a.m. Okay. Wednesday, 10 a.m. we're also going to have important news. But what's most interesting is that on Wednesday, when we do get the federal funds rate news coming out at 2 o'clock, and then Powell's statement at 2:30, once we get earnings after hours on Thursday, whatever happened on Wednesday can be completely changed. Basically, if the market responds in a certain direction, right? Like, say, for example, the market bounces very, very heavily, right? And then Thursday, after hours, you get Apple and Amazon, or Apple and Google have terrible earnings that can cause the market to fall. So there's a lot of just back and forth seesaw sort of action that may end up happening this week. But yeah, let's just dive straight into the analysis of the S&P 500. So we're looking at the SPY, right? The only thing that I'm currently holding as swings are the GME calls and the long-term Mara puts. That's basically it. But I was actually very, very surprised that we just fell like this. We never even got a retest to 406. We never even got a retest to 406 or 407. I was saying that I would be shocked if we did not, but they did not. They did not reward people. Like, I mean, basically the best trade was to go short heading into Friday's close, but that was a very, very risky trade because you weren't waiting for any confirmation. You had to be early, so they forced people that wanted to short to be early in this trade, which was fine. We just didn't go short, unfortunately. Not that we lost money on any of the trades or anything like that, but we just did not add to our shorts when essentially I wanted to add to my shorts today on like a retest of a move here, because I knew that we would show some weakness, but I was greedy. I wanted some sort of a retest first, but today we didn't get a retest. It just dropped like a rock. So yeah, we didn't get that. But now, right, it's not enough to just throw the whole house at puts. Obviously, every single day now there is going to be important news coming out for the remainder of the week. So clearly guys, I mean, obviously it looks very bearish, right? We got a wick here and then continued downward move down here. This is the sort of setup where even if we do get for example, if we do bounce back up to like 402, 403, that would be like an opportunity to go short again. But I mean, the only issue is that there's going to be earnings and there's going to be, you know, the Fed rate and everything is going to be released at 2 o'clock. But this clearly looks like a bearish setup. And the only issue with trying to go short right now is that we're basically at multiple levels of trendline support. So for example, this downtrend line on the SPX, we're closing in and we basically closed a bit below it, but this is basically right on the trend line here. And once we broke above the trend line, we obviously had a massive move upwards, but now we retested the trend line. So this is still technically bullish, right? And on the SPY itself, I mean, it's let me rephrase what I'm saying. This is not a complete change in like the bullish structure. Okay, like we're still on trend line support, but it's not a reason to be very, very bullish, but it makes more sense to lean short, right? Obviously, this is a very bearish setup. This whole setup, this is clearly bearish, right? But because we are on trend line support, that is a reason why we can't just throw the whole house at puts. All right, I hope that made sense. So now going back to the SPY, right? We are basically back at this 400 level, right? We didn't get a close back below 400, but this is still not like a strong reason for us to start going long again, because now off of this setup, right? Can you imagine if we have multiple green days off of a setup like this? This would be very, very unlikely for us to have some sort of a setup like this. I would actually be shocked again if we did. But so instead, just looking at this setup, right? Imagine having 3 green candles just back to back, or just an uptrend and then and end up breaking above that. This would just be very, very unlikely, right? So what I'm most likely assuming is going to end up happening is we should get a retest to basically 403.50 to 404, and that would be an opportunity for people that were not short to reload up back on shorts. And then if we're going to break below 400, it will be, in my opinion, off of a retest of at least like 403. So if we hit 403, that would be a good opportunity to try to go short with a stop loss basically at 405. And then you could just see if this heads down. Basically, we have some time. If you look at the macro calendar, actually, no, we actually don't really have time to swing anything too heavy. Because, say, for example, tomorrow, right? Tomorrow is going to be Tuesday. I'm just talking out loud now. So say, for example, tomorrow we hit 403, right, on the SPY. That's Tuesday. Wednesday morning, we have a lot of news. Wednesday at 9:45, 10 a.m. we have news. And then at 2 o'clock we have news. So if Wednesday morning we did not have any news until 2 o'clock, then I would be way more comfortable getting into shorts and then swinging them overnight. But unfortunately, because there's a lot of news coming out at in the pre-market on Wednesday, and because there's news coming out at like 10 a.m. and at 9:45 a.m. If our puts don't do well, we're not going to be holding anything too substantial during important news releases anyway. So that's what makes this a bit more difficult to hold positions during news. And because there's so much news, it becomes a bit more difficult to hold these positions. So yeah, definitely during this week, it makes more sense to be a scalper. It's way more risky to hold anything overnight. But my thought process, it would have been nice if we didn't have news, but that's just a wild card. We can't take into account what happens. But overall, this looks like a very bearish setup. The way that I would play this is, once again, I would go short at around 403, 404 with a stop loss if we get a close above 405. And we would see if this is a continued move down, because this would be a very, very interestingly weird setup. If we never cross below this low, at 428. If we never break below 428, I would be absolutely shocked. Based off of this setup, it should be breaking below today's low. I would be shocked because I was already expecting us to hit 406, 407, and the fact that we didn't is not strong at all. So, hey man, we have to see how this plays out. Really, anything can continue to happen, but that is my thought process. I still do think that we break below this low, and to get a better understanding and a better gauge of where the market might go, we should take a look at the bonds, the dollar, and the VIX. All right, so the bonds clearly don't really look that bullish. We know that the bonds have a bit of a correlated relationship to the market. So if the bonds are doing well, then the stock market should also be doing well. Clearly, this is not looking very strong. Similar to the SPY, I would be very surprised if the bonds hold this level of support, but I could be completely wrong. And I think an invalidation of this bearish structure, because this is clearly a bear flag, and an invalidation of this bearish structure would be a close above 130.22, basically. If the bonds end up breaking above 130.22, then I guess we could continue up. But clearly this does not look like a bullish structure at all on the bonds. So currently the bonds look bearish. So now this is a chart of the VIX. This doesn't look as interesting as the dollar, but we're going to take a look at the dollar next. And yeah, we know that the VIX has an inverted relationship to the market. So if the VIX is rising, that means that the stock market is falling. So today we gapped up on the VIX. And another interesting thing is that we crossed above on the MACD indicator. So if this momentum continues up, right? Generally, as the MACD crosses above, we should have at least 1 to 2 days of continued bullish pressure. So if we have continued bullish pressure in the VIX, that means that there is bearishness in the market. So that's currently what the VIX is showing, but it's not a good sign that we stopped at the 20 exponential moving average. So the 20 exponential moving average is something that we're definitely going to be looking at, because every time it taps over the past few weeks, that's been a very, very major level. So if the VIX can get a close above the 20, then it can continue up even more. But so far, this is clearly this is much more bullish than the bonds. So bullish VIX is bad for the market. And last but not least, the dollar began to break out of its falling wedge pattern. And we also know that the dollar has a bit of a negative correlation to the stock market. So if the dollar is rising, then the stock market is falling. And currently, this is a very bullish setup on the dollar. We broke out of the falling wedge. We had a green candle. So generally, basically, as long as these important like fib levels on this candle can hold, we should continue up. But for at least another day, I would be shocked if on the first day that we break out of the falling wedge that we like revert back inside. But you know, anything can happen. But clearly, this is looking bullish on the dollar, right? And the other thing that I was mentioning was the MACD indicator, the blue MACD indicator needed to stretch above extremely. It needed to show a lot of buying pressure, and it needed to be very, very overbought. And the reason for that is because if the MACD indicator, basically the blue line, would start showing a very, very overbought conditions, it would slowly average the slower MACD line to start moving its momentum upwards. So the only way for that to happen, the only way for this slower MACD line to start moving upwards, is if the faster acting line really starts pumping upwards and then sustaining itself in the price. So yeah, that is, the dollar is doing what it needs to do for a bullish continuation. And clearly this looks like a bullish setup on the dollar, and a bullish setup on the dollar is bearish for the stock market. And the last thing I want to take a look at is a chart of lumber and the SPX. So lumber is a good gauge of how weak basically the market can end up being. And one of these instances, so basically I showed how in different instances in the past, when lumber was extremely overextended to the upside, it would give some sort of a sell signal on the SPX. So we're not just there yet. So we were very overextended yesterday. And then basically you could see on lumber, very overextended, opened and closed outside of the upper level of the Bollinger Band. We know that that is very algorithmically overextended because we're trading very far away from the upper level of the standard deviation. So there have been multiple instances in the past where basically weakness in lumber and overextension to the upside in lumber signaled top, but in this instance, it was the only time where it needed to wait for a lot of weakness out of lumber for showing of the SPX. But basically every other time when there was a lot of weakness in lumber or overextension to the upside in lumber, it signaled a top in the SPX as well. But now one of the interesting things that I want to take a look at is there was this one instance in August where lumber was it was showing a lot of strength, and you could see correspondingly on the SPX chart on the right here, basically right here, if you just look at this, all right, you can see that everything was holding pretty well. Everything was pretty stable. All right. Then on this day, on August 18th, lumber had a big red day. It filled the gap down below and it closed red. Correspondingly on the SPX on that day, it was a bit of a green candle. But what this basically showed us was it confirmed that the SPX was topping out with this big red candle in SPX. Does that make sense? With this big red candle in lumber, it confirmed that the SPX was just topping out up here. So lumber is a good gauge to see, unless it's a good gauge basically in two main instances: when we're trading very overextended to the upside, or when it shows extreme weakness. So the extreme weakness, it clearly permeated into the SPX. So currently on lumber, we're just going to have to wait and see how much more overextended this can go, because I was not expecting us to get a big bounce back into lumber like this. And the fact that we're not yet extremely overextended and that we bounced like this today doesn't automatically smell bearishness for the SPX as it did before. So there's that. I hope you guys enjoyed today's analysis. Make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.